And so you also had brought up, ways for buyers to really come out on top in this changing market. And I'm really excited for them to hear about them. Can you touch on those things that you were discussing about, their credit and down payment options? Can you touch on those things?
Yeah, definitely. And I'm speaking to basically anybody that wants to buy real estate, whether it's your
Right.
first time, you're upgrading your home, or you want to buy investment property for real estate. So these are all the
Right.
things that I would do myself to prepare myself to buy. So number one is keeping your credit clean. Credit score is just, determines the interest rate, and being at the absolute optimum credit score, I think, is very, very important. So
Right.
I downloaded the Experian app, and I kind of geeked out for like the last 6 months to kind of see where my credit score goes and what things made my credit score better.
Right.
One of the things I realized is I actually asked my wife, I said, hey, she pays the bills in my family. She likes to manage all that. I said, hey, let's pay our bill 3 days before the credit card statement actually comes out. So before it's
Right.
actually due, let's see what happens. She started paying it 3 days before, and our credit score actually spiked about 10 points. And I was like, oh,
Wow.
wow, that's actually
Wow.
kind of cool. Nobody's ever
Yeah.
told me that before. It's just me messing around.
Yeah.
Secondly is keep your credit cards at a 30% maximum. So if you have a $10,000 limit, don't charge over $3,000 on that.
Okay.
If you're going to, go to the credit card company and try to get that account increased.
Okay.
My wife wanted a points card so that we could use that to travel. So when they approved us, they only gave us an X amount of limit, and it wasn't enough because we always used the credit card. So I was like, went back to them and said, hey, I'm only taking this credit card if you bump up my line by 50% more. Oh, no, sir, we can't do that. And I said, okay, cool. Just cancel the card then. Oh, no. Hang on a second. Oh, we actually just got the approval. So sorry about that. So they'll do it. So just keep pressing at it.
Right.
Don't pay bills late. That's the absolute, that will drive down your credit score tremendously. I have people with 800 credit scores, and they make one late payment on a credit card, and it was for $50. And if you're $50 late, or if you're $3,000 late, it's
Right.
still the same impact on a credit score. You were late.
Right.
That's going to drop that credit score. So try to keep everything on auto pay, pay things as soon as possible. Mute some stuff. Like if anything shows up on your credit score, you can go to TransUnion, Equifax, Experian. So it's the 3 credit reporting agencies. You get a copy of your credit report, each for free, 1 per year, and dispute anything on there that is showing a derogatory remark on your credit report. Even if it's something from 3 years ago and you have no paperwork in regards to it, dispute it.
Yeah.
70% of the time, it's going to fall off if you don't owe them any more money. So it'll just help
Right.
you in the long run. So
Right.
definitely do that. Don't buy a new car. I like to throw out this number real quick. A $700 car payment per month, which is almost normal these days, equates to $116,000 worth of mortgage. So if you go out and buy this
Wow.
car for $700 a month, you're gonna not be able to qualify for $116,000 more on a mortgage payment. So
Wow.
that's pretty sobering.
Right.
Down payment wise, everybody asks me, what should I do about down payment? How do I put 20% down? Down payment's not required to be 20% down. You can get as low as 3%, 5% down, some situations like that. But some of the ideas that have happened lately is down payment, like some of these people who do get stock options from their restricted stock units, instead of actually selling the stock, they can actually borrow against it. So that money is still being invested in the stock market, but they're just borrowing against it for the down payment. And they've been loving that because they're not actually having to lose that asset. Asking for gifts from family members. So definitely you can use that as your down payment. Borrowing from a 401k, I love that because interest rates are down right now as far as 401k goes, as far as how much they're paying you back. When you borrow from the 401k, you pay yourself back the interest that you're paying. So you're just paying yourself back those payments. And right now, again, that it's not creating very much interest, it's a great place to borrow from. Next is about income. I've had a lot of conversations of, I'm pretty blunt when it comes to what is it that you have to do, because my world is numbers, where numbers are finite. It is what it is. I've told so many clients, hey, you actually need to make X amount of dollars to buy here in Santa Cruz. So here's my card. Go to your boss, tell your boss, in order to buy in Santa Cruz and stay in here, I need to make X amount of dollars. So I've actually had a few great feedback that people got raises because of that,
No
blaming it on
way.
me, that they need to make a little bit more
Wow.
money. So I tell
Wow.
them to go do that. I've even had people, I had a transaction not too long ago where two best friends bought together. There was two houses on one lot. They brought their finances together and they were like, hey, why don't we go in and buy this property together? They didn't have spouses, significant others. And so they're like, hey, let's combine our buying power. We can buy something better. And they're
Wow.
ecstatic. We closed last month and they're able to buy together. I have that exact situation right now where four people are coming together to buy this one property. So I'm
Wow.
seeing that more and more. My idea on that is have your prenuptial set up. So have your exit strategy just in case. But
Yeah.
it's when a single person can't do it, there is other ways of possibly doing it.
Right.
I've even had some clients go and talk to their parents and, hey, can you help me buy this property and we'll co-sign and we'll own this house together. And then I'll go out and rent out rooms so I can help make the payment. So,
Right.
that is a great way. Here in Santa Cruz, it's hard to find places to live, and it's in such demand that if somebody can buy in and have 2 or 3 extra rooms and be able to rent those out, it's a great way of being able to afford a property here in Santa Cruz because things are expensive.
Right. Right.
Um,
I'd say the majority of people that I work with, unless they're selling another property, they're usually getting some type of funds from their parent. I would say it happens more often than it doesn't.
yeah, exactly. And I think in our society, as a parent, I'd always love to help out my kids wherever I can. So yeah, it happens quite often.
Right.
Um, I've actually had a quite a handful of people who have inherited IRAs. So either, I had one where their uncle passed away and inherited an IRA from the uncle. Well, on that IRA, when it's inherited, even though you're not of retirement age, I can take that IRA balance and divide it by 36 months, and I can actually use that as income. She didn't know that she could do that. So it had her qualify for a way bigger property or more expensive property. And her plan was to rent out rooms. So she knew she would be able to make the payment. But
Right.
on inherited IRAs, you can actually use that money as income in order to qualify.
Wow.
So pretty cool.
Yeah.
Just earlier this year, they changed that you can actually use rents from the accessory dwelling unit on a property. You can use those
Perfect.
rents to qualify now. That's pretty cool. So they're doing some things, and Santa Cruz is filled with
Yep.
accessory dwelling units everywhere. So that
Right.
has helped out clients big time. And then there's this actually a Netflix series, or it's a documentary. It's called Get Smart with Money right now. And it was actually really cool. I watched it about a week ago, and it was just real world things that you can do today in order to limit your bills going out or save a little bit more money. It was really down to earth, and I suggest to my clients definitely watch it. It's even easy for kids to watch. So I've had my kids watch it too, and it was actually a really good series. And then also just bills. Like I had said, don't buy any new cars. If you do, take the longest. I understand you have to sometimes. I had to starting out in life. I had to take a car loan because I didn't have the money to pay cash for it. But take out the longest length of loan possible, so it keeps your payments down as low as possible. That's your
Okay.
minimum payment, because that's what we're going to qualify off of. If
Right.
you take a 6-year loan but make payments based off of 3 years, I'm still going to take the 6-year loan payment as your minimum qualifying payment. I
Right.
don't have to use the 3-year. So some people are like, I want to pay it off quicker because the interest rate's lower. It could hurt you in the long run.
Right.
Same thing with a 30-year versus a 15-year loan. A 15-year, the payment is so much more greater that it's stopping you from buying the next property. I looked at a payment yesterday between a 30-year and a 15-year was $1,700 difference. That $1,700 difference represented $283,000 in less buying power. So
Wow.
somebody who they were in a situation where their current residence, they had a 15-year, they wanted to buy a new property without selling their house first. Well, because they took that 15-year, it was stopping them from borrowing $283,000 more. So
Wow.
that's just the 15-year versus the 30-year, where it can be detrimental.
Right.
Last thing is, if you're a homeowner now, I'm a huge fan of home equity lines of credit. Home equity lines of credit, they usually are no cost, and you don't pay on that money unless you borrow the money. So I love them for emergency purposes. Like,
Right.
for example, when the coronavirus hit and they basically sent us all home on March, 20th or something like that, whatever the day it was. I called my wife. I said, hey, let's pull off the 250,000 off our equity line. I have no idea what this means. We may have to pull up the family and move to New Zealand. So we took that money, deposit all into our savings account. Yes, I paid interest on it for 2 months, but I slept well at night knowing that we had this extra fund in there. Home equity lines of credit can be used for down payment on the next property. There's just so much more accessibility if you were to have it. I had a client the other day call me and she wanted to do a home equity line. And she said, I just want, something small, just a $50,000 home equity line. And I was like, you know what? My recommendation is take the biggest amount you can get. You could take a $300,000 equity line just in case something comes up. If your house burns down, then you could just write a check off that equity line to get it rebuilt. If, all of a sudden unexpected bills come up, you have the ability. So I encourage my clients to go get home equity lines. And you always want to borrow money when you don't need it. Right. I'd say those are probably my main things to pay attention to get yourself set up to be buying the next property.
Wow. Okay. Well, it sounds like you have a lot of great ideas for buyers that are looking to buy. What is the best way for a buyer to get in contact with you if they have further questions?
So best way is on my cell phone number, which is 831-818-2339. I am one of the people that when I call Verizon, I want to talk to them right then and there. I don't want them to, get on the line and call me 12 hours later. So I work the same way with my own clients. I don't care if it's Sunday evening, it's 5 o'clock. I don't care if it's 9 o'clock. Call me. If I'm awake, I'll answer. I'll work when you work.
That's awesome. And I can attest to that as well. You are the best lender here in Santa Cruz County.